This is Brad Berry, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this Market and Economic Update, where we'll review the second quarter of the year. Now, these past 3 months have been a lesson in patience for investors. Volatility rattled markets, which then recovered to new all-time highs by the end of June. The S&P 500 and NASDAQ both reached record levels with impressive gains of 10.6% and 17.7% respectively over just the last quarter. Bond markets were a source of some stability over this period and also delivered positive results, with the U.S. aggregate bond index gaining 1.2% for the quarter. Now, over the next few minutes, we'll discuss some of the key drivers of markets and the economy over the last quarter and provide context on where we are headed in the second half of the year. First, this chart shows how the stock and bond markets have performed year to date and how this compares across history. The second quarter began with heightened uncertainty following the announcements of new tariffs on April 2nd, which proved more extensive than many investors had expected. However, as the administration engaged in negotiations and enacted pauses on tariffs, market sentiment gradually improved. Similarly, Middle East tensions created initial market concerns, but the stock market demonstrated broad resilience and ultimately advanced to new highs following the announcement of a ceasefire between Israel and Iran. The stock market recovery has been notably widespread, spanning multiple sectors, investment styles, and geographic regions. However, just as we encourage non-emotional decision-making during times of market losses, we also encourage the same during periods of very strong gains in the market. Uncertainty in the market remains, and investors should always be prepared for a range of possible outcomes. The US dollar weakened through the second quarter. A weaker dollar can certainly be negative for consumers, but it's often positive for US businesses and exporters since it becomes cheaper for those using foreign currencies to buy our goods. Even though the dollar has declined this year and is near the low end of its range since 2022, its value is actually still higher compared to the past decade. On the monetary policy front, the Federal Reserve maintained interest rates at 4.25% to 4.5% throughout the quarter, demonstrating a continued cautious approach. Fed Chair Jerome Powell continued to emphasize the central bank's commitment to price stability amid various economic headwinds. The Fed's latest economic projections highlight the challenges facing policymakers. Officials now anticipate inflation will reach 3% in 2025 before moderating to 2.1% by 2027, an upward revision from previous forecasts. This reflects continued concerns that tariffs could drive inflation higher while dampening economic growth. Finally, bonds played an important stabilizing role in balanced portfolios in this turbulent quarter. While stocks reached new all-time highs by quarter's end, the journey included significant volatility that tested many investors' resolve. During these periods, bonds proved to be a helpful portfolio stabilizer. However, as you can see in the graph, over the last few years, bonds have had their drawdowns, which is why we stress having multiple diversifiers, which includes not just different asset classes like stocks, bonds, and alternatives, but also incorporating different strategies and approaches towards investing, what we like to call multidimensional asset allocation. Additionally, budget discussions refocused attention on America's fiscal outlook. The national debt now exceeds $36 trillion, and the Congressional Budget Office estimates that the latest budget proposal could add another $3.3 trillion in deficits over the next decade. For long-term investors, these fiscal debates reinforce the importance of maintaining truly diversified portfolios capable of weathering various policy outcomes. I hope you found these high-level insights helpful. If you are a financial advisor and would like more information on our multidimensional approach towards asset management, feel free to download our white paper titled Busting 7 Risk and Return Myths. You can click the link below or visit our website at dynamicwg.com or email us at info@dynamicwg.com. If you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, take care, everyone, and make smart, logical, and fact-based financial decisions.